Welcome to Acctvocab. Today we're diving into a cornerstone of modern accounting, accrual accounting. What is it and why is it so important? Let's break it down in just 2 minutes. What is accrual accounting? Accrual accounting is a method where income and expenses are recorded when they're earned or incurred, not when cash actually changes hands. This means revenue is recognized when a sale is made, even if the payment comes later. Expenses are recorded when they're incurred, even if the payment hasn't been made yet. Why is it important? Accrual accounting gives a more accurate picture of a business's financial health because it matches income and expenses to the periods they belong to. This is especially important for businesses that operate on credit. Example of accrual accounting. Let's say you run a consulting business. In December, you complete a project worth $10,000, but the client pays in January. With accrual accounting, you record the revenue in December because that's when you earned it. Key benefits. Here's why businesses love accrual accounting. 1. It reflects financial reality, not just cash flow. 2. It helps businesses plan better by tracking all obligations. 3. It's required for most companies under generally accepted accounting principles. So, whether you're running a small business or managing a large company, accrual accounting is your best friend for understanding financial performance. Got it? Great! Don't forget to like, subscribe to Acctvocab, and share this video with your network. See you in the next video.